Let's be real. The world of trading is pure chaos. For most people, it's an absolute recipe for disaster. But for the pros, it's just another day at the office. So what's their secret? How do they do it?
It's not some crystal ball or a secret magic indicator. For at least one professional trader we're looking at, the secret weapon is a rock-solid, non-negotiable morning routine that builds an ironclad defense against making stupid, emotional decisions.
And the stakes? They could not be higher. As our source makes brutally clear, if you don't have discipline, you're not just risking a bad day, you're risking your entire career. Control isn't a nice to have, it's a survival mechanism.
So let's break this routine down step by step. It's a process that takes all that market chaos and shoves it into a framework you can actually manage. And it all starts way before you even think about turning on the charts.
Okay, first up, priming for performance. Now, this has nothing to do with market analysis, not yet. This is all about getting your body and your mind ready for the insane amount of focus you're going to need to trade effectively.
So what does this look like? Well, it's actually surprisingly simple. You start by hydrating and fueling your body, we're talking water and a banana, just to get rid of any physical distractions. Then, you do a mental reset. You check the economic calendar to see where the scheduled explosions are for the day, and you take a quick look at yesterday's analysis to make sure it still makes sense. It's all about getting your bearings before the battle actually begins.
And that economic calendar, you're not looking at it to predict what the news is going to be. Think of it more like a TV guide for volatility. It just tells you when to expect the big, high-impact events that cause the market to make its big manipulative moves, and that is where the opportunities are hiding.
Now we get to the absolute core of this whole strategy, setting the weekly bias. This is the analysis you do over the weekend, and it basically dictates the direction you'll be looking to trade for the entire week to come.
See, professional traders aren't wasting their time trying to guess Friday's closing price. They're focused on something called weekly expansion. All that means is, what's going to be the direction of the biggest price move during the week? Is it going to be up or is it going to be down? Answering that one question gives you a filter for everything else.
This really shows the huge difference in mindset. Amateurs, they get lost chasing all the daily noise, trying to predict every little wiggle. Pros, they figure out their weekly bias by looking at institutional order flow. That's the big money, the banks, the hedge funds, and they use that as a powerful filter to just ignore anything that doesn't fit their main idea for the week.
And our source is pretty clear about this. This isn't just another indicator on your chart. It's the ultimate filter. It gives you the clarity and the confidence to navigate the week because you know you're trading in the same direction as the big money.
Okay, so you've got your weekly bias. How do you actually get into a trade? Well, this is where things get a little counterintuitive. You actually wait for a move against your bias. It's a move called the Judas swing. I mean, think about it. If you are totally convinced the market is going higher for the week, why on earth would you sit on your hands and wait for it to fall? The answer has everything to do with understanding market manipulation. Because it's a trap. A high-impact news event comes out, and boom, a sudden drop. Amateurs freak out, they panic and sell, and that creates this big pool of what's called sell-side liquidity. Basically, a ton of people willing to sell. And that's when smart money swoops in. They use this manufactured panic, what our source calls a broken wing trick, to buy from all those panicked sellers at a huge discount, right before the price whips around and goes back in the true direction of the weekly bias. But, okay, what if you decide to trade against your main weekly bias? You see a little opportunity. Well, there are very strict, non-negotiable rules for that. And the first one is a golden rule for managing your risk when you decide to go against the grain. 50%. That's the number. It's basically a built-in safeguard, like a circuit breaker for your own ego when you think you can outsmart the dominant trend. So let's say your weekly bias is bullish, but you see what looks like a good short-term selling opportunity. You can take it, but you can only do it with half your normal position size, or even less. This rule forces you to acknowledge you could totally be wrong, and it automatically cuts down the potential damage. It's just disciplined risk management, pure and simple. All right, and that brings us to the final and I'd argue maybe the most critical rule of this entire routine, the 2 trades and done rule. And this one isn't about analysis, it's about psychological survival.
2. That's it. Simple, brutal, and incredibly effective. 2 strikes, and you are out. No discussion, no exceptions. If you take 2 losing trades in one session, you shut everything down. You close the laptop and you walk away. This rule single-handedly stops revenge trading, where you make dumb, impulsive trades just to try and win back your losses. It's like the ultimate kill switch for emotional trading,
stopping a small loss from spiraling into a total disaster.
Now, I know what you might be thinking. A rule like that sounds super restrictive, but our source argues it's the exact opposite. It's liberating. It frees you from the pressure of always needing to be right. You just accept that losses are part of the game, and you have a concrete plan to contain them.
And when you boil it all down, that's the big takeaway from this whole thing. A professional's routine isn't designed to make you perfect. It's designed to make sure you survive and to enforce consistency. It's about playing the long game by managing your risk, mastering your own psychology, and just sticking to the damn plan.
And that really leaves us with one final thought. This level of structure, it's not just for trading. I mean, whether it's getting fit, getting better at your job, learning a new skill, having a disciplined routine can be the difference between chaotic failure and consistent success. So, where could you apply it in your life?